Right now, in January 2026, the United States government holds a massive gold reserve, over 8,100 metric tons. But here's the kicker. It's grossly undervalued. Officially, it's listed at just $422 per ounce, a price set back in 1973. But today, the real market price of gold is soaring at over $4,600 per ounce. Do the math. What's on the books is a fraction of its actual worth, meaning there's a hidden $1.2 trillion sitting in government vaults. This hidden asset is not just an accounting error. It's part of a financial pattern we've seen before. History shows that when governments are faced with unsustainable debt, they turn to their gold reserves, and they revalue them. This isn't just speculation. This has happened twice in the past, and both times it was a trigger for massive wealth transfer, from the public to the government. The critical question now is, when will the U.S. close this gap? And if you're holding cash when it happens, you may be in for one of the biggest wealth transfers in American history. Stick around because this is a financial shift you won't want to miss. The U.S. government has long held gold reserves, but the real value has never been fully reflected on its balance sheet. As of today, these reserves stand at over 8,100 metric tons, but on official records, they're still valued at a mere $422 per ounce, set over 50 years ago. The actual market price? Over $4,600 per ounce. That creates a staggering $1.2 trillion gap between the official value and reality. This discrepancy isn't accidental. Historically, the government has used gold revaluation as a tool to manage financial crises. The question isn't whether this will happen, it's when. When the government finally revalues its gold reserves, it could have a massive impact on the U.S. economy, and it's all tied to this hidden gold wealth. This situation isn't new. We've seen this exact pattern play out before, twice in modern history. The first example came in 1933 during the Great Depression. In a desperate attempt to stabilize the economy, President Franklin D. Roosevelt issued Executive Order 6102, making it illegal for citizens to own gold. The government forced Americans to surrender their gold at $20.67 per ounce. But just months later, they revalued that same gold to $35 per ounce, giving the government a massive 69% gain, while those who surrendered their gold lost out. The second time came in 1971. President Nixon took the U.S. off the gold standard, meaning the dollar was no longer directly convertible to gold. Over the next decade, the price of gold surged from $35 per ounce to $850 per ounce, an astounding 2,329% increase. This pattern, the devaluation of currency followed by a revaluation of gold, has played out before and will likely play out again, but this time it's happening on an even larger scale. There's a predictable four-stage process that governments follow when debt becomes unmanageable. It's a cycle that has repeated twice in U.S. history, and the fourth stage is always the revaluation of gold. Let's break it down. Stage 1. The government's debt reaches an unsustainable level, typically between 90 and 130% of GDP. This is when the debt is too large to pay off through taxation or economic growth. The only option left? Devaluation. Stage 2. Confidence in the currency starts to fade. Foreign governments, investors, and citizens lose trust in the dollar, and they start seeking tangible assets like gold. This is when capital flight begins, and money starts leaving dollar-denominated assets. Stage 3. The government's gold reserves remain static while the national debt continues to balloon. For over 50 years, the U.S. has held the same amount of gold, valued at outdated prices. The discrepancy between the official and market value grows ever larger. Stage 4. The final stage is the revaluation of gold. This is when the U.S. government adjusts the price of its gold reserves to reflect the true market value. This policy shift would be a game changer, impacting the national debt and the value of the dollar. In 1933, the U.S. government was facing a severe debt crisis, with the country's economy in free fall. To stem the financial collapse, President Roosevelt issued Executive Order 6102, forcing citizens to surrender their gold at a fixed price of $20.67 per ounce. But just 9 months later, the government revalued that same gold to $35 per ounce, generating a massive profit for the Treasury. This marked the first major wealth transfer in modern American history. Citizens were required to surrender their gold at a fraction of its real worth, and the government reaped the benefits. This revaluation of gold was a critical step in addressing the national debt. The public, however, was left holding devalued paper currency, as the government used the increased value of gold to recapitalize and inflate the money supply. This wealth transfer from the public to the government was executed flawlessly, and history may be repeating itself once again. Fast forward to 1971. The U.S. was once again facing a debt crisis. The government had been printing dollars far in excess of its gold reserves, and foreign governments were starting to demand physical gold in exchange for their dollar reserves. This led President Nixon to close the gold window on August 15, 1971, effectively severing the dollar's direct link to gold. While the official price of gold was still $35 per ounce, the market price began to climb, reaching $850 per ounce by 1980, a staggering 2,329% increase. Investors who held physical gold saw their wealth multiply, while those who held dollars or dollar-denominated assets saw their purchasing power plummet. Nixon's decision, although initially a shock to the system, laid the groundwork for a new financial order. Now in 2026, the U.S. is at a similar crossroads. National debt has reached a critical level, $38 trillion or 128% of GDP. This is the exact scenario that triggers the first stage of the pattern. The government is boxed in. They can't raise taxes high enough to cover the debt, and they can't print money without causing hyperinflation. The only remaining option is to devalue the currency. Simultaneously, the US dollar is losing credibility on the world stage. Countries like China and Russia are aggressively building up their gold reserves and shifting away from the dollar. As these global shifts gain momentum, the dollar faces increasing pressure. Just like in 1971, the US may soon find itself unable to maintain the dollar's status as the global reserve currency. As the national debt explodes and the dollar's credibility erodes, the U.S. government still holds a massive hidden asset, its gold reserves. These reserves, though static for 55 years, represent a potentially game-changing financial tool. At the current market price, the U.S. gold reserves are worth over $1.2 trillion, an asset that could be revalued in the event of a financial crisis. If the U.S. government revalues its gold to current market prices, or even higher, it would immediately gain the ability to retire a significant portion of its debt. This is not just a potential market shift, it's a policy decision that could transform the U.S. balance sheet overnight, changing the financial landscape for everyone. What would happen if the U.S. government revalued its gold reserves? Let's run the numbers. If gold were revalued to $20,000 per ounce, the U.S. government would instantly gain $523 trillion in value. This could be used to retire existing debt, recapitalize the banking system, or even anchor a new gold-backed digital currency. This isn't a market event that unfolds over years. It's a policy decision that happens overnight, leaving little time for preparation. The revaluation of gold could be triggered by a financial crisis, political turmoil, or a major geopolitical event. By the time the public catches wind of it, the opportunity to act will be gone. The window to prepare for this revaluation is closing fast, and those who are unprepared will miss out on potentially life-changing wealth preservation. If you want to protect your wealth from the upcoming financial storm, you need to position yourself now. History has shown us that gold is the ultimate hedge against currency devaluation and economic crisis. When the revaluation happens, those who hold physical gold will be protected, while those holding paper currency will see their purchasing power evaporate. Now is the time to start investing in gold, silver, or other hard assets that can preserve your wealth. Don't wait until the revaluation is announced. By then, the window of opportunity will already be closed. Take action now to secure your financial future before it's too late. The timing of the revaluation is not a matter of speculation. It's a mathematical certainty, and it's fast approaching. History has already given us a clear blueprint. In both 1933 and 1971, major shifts occurred in the U.S. financial system that transformed gold's value virtually overnight. The financial crisis of 2026 is shaping up to be the third such event, with government debt at historic highs, the dollar losing its global dominance, and gold reserves sitting on a massive, untapped potential. Right now, the government's gold reserves are stuck at outdated book values, but once the revaluation is triggered, the value will be marked to market. That's when the financial storm will hit. And by the time the public hears about it, the opportunity to position yourself will already be gone. This window is closing quickly, and the chance to protect your wealth by investing in tangible assets like gold won't last long. The critical question now is, will you be ready when the government makes its move? Will you act now to safeguard your assets, or will you wait until it's too late? History shows us that the window for preparation closes faster than most realize. This is your final call to act before the revaluation event changes everything. The signs are clear. The U.S. is on the verge of a financial reckoning, and the revaluation of gold is not just likely, it's inevitable. The government has executed the same playbook twice before, and now it's your turn to act. The opportunity to position yourself for the revaluation is shrinking by the day. Don't be caught off guard when it happens. Investing in gold isn't just about seeking profit, it's about preserving your wealth during times of financial uncertainty. The revaluation of gold will be one of the most significant wealth transfer events in history, and those who understand the pattern and act early will come out ahead. Position yourself now and protect your wealth before the inevitable happens. Time is running out. Make your move today.